Hey, it's Tina Brinkley Potts, and welcome to this episode of Amplify Your Expertise. When I decided to do this show, I said I was going to bring people on that, maybe I've met that I really trust that really do what they say they're going to do. And you know what? Nobby Kleinman is one of those people. I can tell you when back about a year ago, I reached out to him because I was having a little situation. And, I knew that the advice he was going to give me was sound advice. So I wanted to bring Nobby on and talk about this bubble that's about to bust. Now, before I let Nobby start talking, I want to say this. I am not that person that does this doom and gloom thing. I've talked to Nobby about that before we actually started. But what I know for sure is that there are things that are happening right now that are going to start drastically affecting a lot of people out there, that if you get this information now, you can be more empowered to do something about it. So first, let's get to know Nobby. Hi, Nobby.
Hey, Tina, how you going?
Good. Tell everybody a little bit about yourself. So first, you hear that Nobby has an accent.
No, actually, I don't have an accent. That's you guys over there. So I'm in Melbourne in Australia, and of course we met when I came over to San Diego on a couple of occasions. So it was great to meet with you and all the other people over there. And I absolutely love coming over to the States. But I suppose to give you a picture of my background, I was a financial planner, and I started in 1987. And a week after I started, the share market crashed, and it wasn't my fault. I didn't break it, but I loved what I was doing, and I stayed in the starting off as an insurance agent, becoming a financial advisor through until 2006, when the industry had changed so much, and it was just becoming stupid about being able to give advice to people without all the regulation around that. So I decided to get out and go off and do something else. So I took a couple of years off and became bored and decided I wanted to come back and help people. And the thing that was going through my mind the whole time was one question that I was constantly being asked by women who were my clients, or they were the wives of my clients. And they would always say to me, look, you're a financial advisor. Tell me, how do I manage my daily money? I don't want to know about financial planning, insurance, or investment advice. I just want to know, how do I manage my daily money? And the problem was that they were having trouble being at home, managing the household money because the cost of living was constantly going up, but incomes haven't gone up, and incomes haven't gone up since the global financial crash of 2008. And so people have been living with stagnant wages, but the cost of living just skyrocketing. So, and that translates through to a number of different problems, such as divorce. Money is always a number one issue when it comes to divorce, because generally what happens is boy meets girl. They get married, they buy a house, they have their first child. By the time the wife is ready to go back to work and put that child into childcare or daycare, they find out that she's pregnant with the second child. And of course, now she's stuck at home with the next child. There's an extra mouth to feed, which means the cost of living has gone up again. And here's a husband going off to work every day thinking, I love my family, but I'm just not getting anything out of this. All I'm doing is working and handing over the money, and I don't seem to be getting anything for it. So they're paying for all of their costs of living, their housing, the food, all of the expenses that go with it, and they keep going up, but the wages don't. So it creates stress and disharmony in the place. Ultimately, for a lot of people, money is 90% of the cause of divorce. So then you have a woman, somewhere around about age 42 on average, standing there, newly divorced, nothing to show for the past, 2 children, and a future where she's got nothing. She's got no experience now to go forward, and she's got to earn a living or an income to support her past age 65. She's only got about 18, 20 years to do that in. So knowing all of that, I wanted to get back into helping people, and I knew budgeting wasn't the way to go. Budgets are restrictive, they're scary, they're confronting, and they don't have an outcome. It's money in, money out, and if that's all that's left over, women would say, I'm not giving up my glass of wine on a Friday night for that.
Not giving up my glass of wine, right?
Yeah. So, and why should you? I mean, you're going to work, you're earning an income so you can actually enjoy life, and that's what it's supposed to be about. So I sat down and I worked on this, and I thought, well, how can I show people how to get out of debt far more quickly without doing budgeting? It eventually came to me, and in the shower, actually, while I was thinking, you do all of your great thinking while you're cutting the grass or washing the car.
Or in the bathroom.
Yeah. So I hopped out of the shower. It took me a couple of weeks to work it all out, and I sent it off to be built, and the program got built, and it came back, and we did some fine tuning to it. And I've hardly changed. I made one big change last year, which really improved the program even beyond what its current capabilities are. And so I took that out there and I started showing this to people, and it was like, okay, I can see this. This is no longer budgeting. This is my financial plan. So the financial planning industry, so to speak, is about selling product to people. Less than 15% of the population go to a financial planner. The reason is they want financial advice, but they don't want financial product.
Right. I mean, and I think the statement you made at first when you said women came to you asking how to manage their daily money, but they don't want to be sold insurance. They don't want to hear about investments. Just how do I manage my daily money? So I can see why there's only, like you said, about 15% that are asking for financial advice, because nobody believes that a financial planner is just going to help you learn to manage your daily money. But that's what your program does, right?
Exactly.
Okay.
Exactly. And I mean, look, there is nothing wrong with financial planners. In fact, I know that financial planners at heart have got the very best interest at heart for their clients. Mm-hmm. But they're not giving the advice people want. They're not listening to what people want. And they don't see that as being their job to give money management advice on a personal basis to people. And yet if they did, they could turn the whole situation around and engender greater trust as to why financial products are a requirement and a necessity. Because the reality is people's lifestyle is based on the income they have. They need to protect that income. So rather than trying to sell insurance for something that people have no idea about, all of a sudden you can now turn around and say, okay, I can see why I need to have the insurance because it's paying for everything, or my income's paying for everything, and I need to protect that. Mm-hmm. But that's a different story. So they're not getting that advice, and unfortunately, there's a growing trend of these people popping up out of cornflakes packets who are money coaches, people who have no experience whatsoever, may have paid off a $5,000 credit card over 2 or 3 years, and all of a sudden they're an expert. And they're going out. And while it's a good thing that people are getting some level of advice, a little bit of knowledge can be dangerous. Ooh. Yeah. So you need to be careful with that sort of thing. So having a system in place, such as what Money Rules turned out to be, allows people to do this on a consistent basis. It's repeatable and it is consistent all the way through. People use exactly the same system to put their information into, but no result is ever the same for two people. Nobody will ever get the result. If you had twins born on the same day at the same time, same incomes, same sort of lifestyle, they're never going to be exactly the same because we all have nuances that make our lifestyles difference in how we spend and how we earn.
Yep.
So and people have different wants and needs.
Mm-hmm.
People spend more time planning their annual holiday than they do planning their retirement.
Mm-hmm.
So you've got to take all of those sorts of things into account. But having a program that you can do consistently and refer back to and update and make minor changes to, or what ifs, that's far more important as a financial plan and a financial tool than it is to get a financial product.
Okay. So Nobby, tell me a little bit about, let's say you have that divorced woman who's now back into the workforce, and she's coming to you and she's saying, how do I manage my daily money? So talk a little bit about what your system does for her, and like how it changes, the trajectory of what it's going to look like for her in the next 25 years as she start approaching retirement. Because you said she's about 42, right? It's normally about 42, right? Yep.
Yeah, look, on average, 42 to 47.
Okay.
The reason they've got themselves into a situation like that predominantly is because it's been about money. So taking control of money is now taking control of her future.
Mm-hmm.
It's that plan, it's mapping out that roadmap, and knowing exactly where they're going. It's sort of like, well, okay, I've got 20 years. So let's work it backwards. What sort of lifestyle do you want to have in 20 years? And you can work all of those things out. What are your cost of living during that 20 years and after that 20 years? So even if you were to work it backwards, now you know how much you need to earn. Right?
Mm-hmm.
Whether you buy a house or whether you rent or whether you move in with your parents or whatever it is that you do, just having a plan to refer to is going to make life so much simpler, because unlike a budget being based on money in and money out, you need to have the money coming in. But if you don't know how to plan it for the next 20 years, a budget's not going to do the trick. So having this plan which projects forward is a far greater benefit and much more value.
Absolutely. Yeah, I was explaining to Nobby before we came on, I was talking about, one of my clients that is in his 60s. He still has about $50,000 worth of student loan debt. And how, if he understood some of the things that are in Nobby's program, how it would have helped him be able to reshuffle some of his money in order to get this down. Because at the end of the day, it's a lot of unconscious spending, right? Isn't it about unconscious spending? And also getting into like you were saying, like once you get into the situation and you have your mortgage and you have this, I think I used the example of somebody bringing home $5,000, but yet all of their expenditures came to $4,000. So they were all they think about is that $1,000 that they have left. And what you said to me is, no, they should be thinking about the whole $5,000. So like talk a little bit about, like, for the women who could be watching now, and especially who are building up mounds of credit card debt. I mean, I know that a lot about coaches. When coaches come to work with me, the biggest thing that is going on behind the scenes that's keeping them up at night, that they want me to help them make a lot of money to solve, is that they've been spending on that credit card trying to get that business to work. So let's talk a little bit about how the program is going to help them.
Okay, so for a lot of people, they do build up a lot of debt, but they don't know the amount of debt they've got. All they know is they've got these debts that they've got to pay off. So it's an unconscious expenditure, if you like. It's like, yep, I can go and put that on the credit card and I'll pay that off the credit card, but they never pay the credit card out in full. If they had to do it with cash, it would be like, I don't have the money to pay for it. End of story. Right? But putting it on the credit card is putting it on the never. So
The
it's
never.
the never, yeah, it's never paid off. It's the manana plan, right? We'll do it tomorrow. So it's this unconscious thing, and it sits in the back of their mind, and they go off and live the rest of their life during the week. And then when the credit card statement comes in, it's like, oh, okay, I've got to pay something. I'll pay the minimum. So they rarely ever pay the whole thing out. And it's amazing. Once you actually get control of your money, you look forward to beating the banks by not paying interest. And you will do everything. I will pay that sucker right out. You're not getting me. I'm going to use your money. So that's the OPM, right? I'm using the bank's money. And I'm not paying you interest. So you go run your business on someone else. But people need to get to that stage, and they can do it. And they can do it so much more easily simply if they've got a plan.
Yeah.
But they don't. They get to age 60, and I said to you before, a person I know said to me, I'm age 60, it crept up on me. It's come out of nowhere. And even at my age, it's like, where's my life gone? It's happened so quickly. And when I look forward, I know I don't have a lot of years left. So how am I going to plan my forward years? But these people who are in their 20s, 30s, 40s, 50s, are going through life blindly, and they're not addressing the most important thing, which is how are they going to live when the income stops?
Yeah.
Because they've got all this debt.
Yeah. And we were talking about that too, like a lot of, especially here, like right now I've been talking about technology a lot, and all of the jobs that are going to change, that are going to go away because of technology. So, going to college, those entry-level jobs, there's a lot of them, customer service, retail, a lot of those entry-level jobs will be taken over by technology. Now, when I talked about this with my son, all he can think of are those movies like I, Robot or something. And he's like, I'm like, take those movies out of your head. But basically, like I explained to him, if you think about right now, and if I were to pick up my phone and I were to order pizza, that is a chat bot that I'm ordering pizza with on that app. It is not a live person. And because we can program them to be smart based on the words that you say when you type in, we just put a whole database that it can go through in 5 seconds to pull the right answer. So a lot of jobs are going away from that. Now, at the same time, those jobs that are going to go away, these people are sitting with debt. A lot of credit card debt, mortgages. So what could they start doing right now to empower themselves instead of waiting, right, until that happens? Because that's normally, you and I also talked about the suicide rates that tend to skyrocket when there's financial issues, right?
Absolutely. Look, it's a really sad situation when people can't manage their money. And you're right, technology is going to drive a lot of jobs out of the market. Think about autonomous driving, right? For trucks, buses, cars, taxis, anything that you like. They're even talking about aeroplanes, right? So
and this stuff is in development right now. This is not like 10 years. They're in development, right?
Absolutely. Right now, it's happening. And they're working on it. I read about the aeroplanes only just last week.
Wow.
And it was like, oh, are you serious? Would I? And yet, when you think about it, autonomous is a lot safer than human reaction. But that's another story. So if all of those jobs are going to disappear, where's the income going to come from? Where are you going to live when all of a sudden the boss says you've been replaced by a robot, and you go home and you've got this mortgage? A robot doesn't have a mortgage. Look at all the robots that replaced workers on the factory floors. And those people were put out of jobs. Robots are manufacturing cars. They're manufacturing white goods. They're manufacturing so many things. People are out of jobs. So where do those people go, and how do they pay for all of their debts? It's not a matter of waiting until you've been put out of work to find out the debts that you've got. It's a matter of managing your money all the way through, so that if you do lose your job, no one can take your home from you. No one can come and repossess your car, and all these sorts of things, simply because you were irresponsible with how you managed your income. You lived the high life while you were earning the income, rather than being responsible and paying that debt off as quickly as possible. And it's being responsible to yourself and to your family, and being able to turn around and sleep at night, rather than worrying about who's going to come knocking on the door and answering the phone and getting stuff in the mail.
Do you think they actually think they're being irresponsible, though? A lot of people will. I mean, it's just unconscious. They just believed everything that was, oh, this is how you're supposed to do it. You're supposed to go get this house with this mortgage. You're supposed to have 2.5 kids. You're supposed to have, isn't it kind of like fitting in almost? Like, that's how I think of it sometimes anyway.
Says who? Who says that's how you live your life? Who dictates to you how you live your life? It's marketing, right? It's marketing. It's the manufacturers who employ the marketers, and the marketers sell you on the lifestyle you want. And then the banks say, we can finance that lifestyle. So it's this vicious circle. They're the ones who've got you. They're the ones you're working for. They're the ones you're handcuffed to.
Yeah.
Right? Because you have handcuffs on you for as long as you owe other people money. You're not working for yourself. You're working for them.
Yeah, I agree. I said, I did a blog probably about a year ago, and I remember the title was, The American Dream Was a Marketing Scheme. Because it was a marketing campaign. That's all it was a marketing campaign.
Absolutely. You watch the program Mad Men. Absolutely brilliant. They are so clever with how they do their marketing. And that's what it's all about. That's why marketers are paid so much money, because it is to suck people into spending their money. Their job is to part you with your hard-earned income.
Convince you to buy.
You only earn it once. And you part with it once. So either you're going to part with it for your benefit or for somebody else's benefit. And generally it's in somebody else's benefit. You're working for someone else. You're not working for yourself. Every day that you get up and go to work, you've got 40 hours in your week or whatever it is. And most of that, if not 44, because of the interest, right, or even more, goes towards paying somebody else. So what you get out of life, because you owe this debt, people who get to age 60, 65, and they still have mortgage debt, they still have credit card and personal debt. And so the average retirement fund in Australia is $140,000, but the average mortgage at retirement can still be somewhere around about, say, $50,000 to $60,000. And the same thing happens in the States and Canada. So here you are with $140,000, you pay out your $50,000 mortgage, and you're down to, what, $90,000?
Right.
They'll ask you, how long in retirement? When should you die? When your money runs out or before? You don't want your money running out before you die.
Yeah, absolutely. Absolutely.
So, and this is what people have to plan for. And
didn't you also say that that's what most people, when you've talked to people, that's one of the things that they thought. They were like, well, I plan to, pay my mortgage off at 60. And then for that little gap of time before I retire, that's when I was going to save for my retirement.
Yeah. It's no good waiting until 60 to start saving for retirement. You should be saving all the way along. And here's the question, should I pay my mortgage or should I pay into my retirement fund? The reality is, from my perspective, and what anyone does is up to them, and it is my perspective, I can say this because I'm no longer a licensed financial advisor who has to write everything down and put it in writing. But my recommendation is pay off your debts, simply because if you lose your job tomorrow, there goes your retirement fund as well. Right? But you've paid off your debts and your mortgage, you've got your house. No one can take it away. You've got your car. You may have to hang on to it for 3, 4, 5, 10 years. No one can take it away. Right? It's yours. You've paid for it. But if you've decided to live on the credit card for the next 40 years and you lose your job tomorrow, you're up for the debt. You'll lose your house, you'll lose your car, you'll lose your family, you'll lose your self-respect, and your whole life gets turned upside down. So if you'd rather be in control, then control how you spend your money. And that is pay off that debt as quickly as possible. Don't give the interest to the banks and the lenders. Don't work for them, work for yourself. Be smart.
And I'm glad Nobby said that, right? So let's just give that infamous disclaimer right now, like for my own personal, I am not a financial planner. I'm not an attorney. Like I want to sound like that whole, like a whole commercial. I'm giving you this information. I'm sharing, doing an interview with Nobby. What you do with it is up to you. Just had to throw that disclaimer in there.
No, but I mean, it's common sense, isn't it? Let's face it. Would you rather be stuck with a whole amount of debt at retirement that you've got to pay out of a lump sum and reduces what you thought you were going to be living on because you planned to live on that lump sum, which has now just been cut in half because you've got to pay out your mortgage? Or would you rather get to your retirement and say, hey, all of this money is mine to live on, and I've planned the lifestyle I want to live based on that?
Now, Nobby, let's talk about your program a little bit, because even though we're saying this, I don't think we didn't go into detail and talk about how your program is showing them how they take the same amount of money and change it around so that it reduces these debts. So you're not even saying, okay, you got to go make X amount of dollars more. You're saying, let's go from exactly what you have, right?
Exactly.
Yeah.
I'm not saying that people should change what they're doing, it's how they're doing it.
Yes.
So, and that's the important thing. With budgeting, it says you've got to limit how much you're spending here, and it's so restrictive, and it's like, I don't want to know, because I know that I'm already going to be losing before I start with the budget. So I just don't want to know about it. What my program does is it says, look, let's go through this. Let's put all of your information that the program needs into it, and it will come back and it will give you a report. And that report will say, this is, in this column, this is what your current situation is like. And without having changed anything, you could be in this column, which could save you, look, it changes for everybody. No two people are ever the same. But it could save you 10 years or 15 years or 20 years or whatever, just by doing it differently. So it's the same income, basically the same expenses, and no real change. But you could be ahead just by changing how you do it.
Wow.
It's optimizing. It optimizes how the expenses are paid. The other thing that it does is it says, here is your picture going forward. You could pay this amount of interest, or you could pay this amount of interest. You could spend this period of years, or you could spend this period of years. So would you rather have a 30-year mortgage, or utilising exactly the same income, would you rather have a 15-year mortgage? Now, go and borrow on the 30-year mortgage, no problem with that, but you can pay it off in 15 years. So what the program does is it first looks at paying off personal debts, because that's what generally where the highest interest rate is. And then it looks at attacking the mortgage. Now, I know in the States, I believe you get a tax deduction for the interest on your mortgage. I don't understand why, but, and this is why people have this mentality about, do you know what? I get a tax deduction from the interest. I'm not paying that sucker off because I can claim it. That is the dumbest thing ever. Who the hell wants to keep paying interest because you can claim a tax deduction for it? You get rid of the interest and don't worry about the tax deduction. Invest the money, right? The money, or stop giving it to the government and the banks and lenders. I keep saying that, but they are your enemy, right? They are.
And then start a business and get other kinds of expenditures that can write that income down. There you go. But again, get your own advice.
Be in control. Don't let others control you.
Yeah.
So, so what the program does is it will show you where you are and where you could be. Now, the beauty of that is, if you can do better, I'll guarantee you can do even better than that. But that requires more work. And that's just more fine tuning. And that's looking at different opportunities. Yeah. And it's the same sorts of things that you're into. Generating other types of incomes. You don't need to leave your current job, right, to use your knowledge, education, or experience to generate a side hustle.
Right. I can show you 18 different streams of income that you can add. I'm up to 22 different streams of income you can add from the expertise and knowledge you already have.
So I'll give you an extra one. The program, and I'm throwing this in there just so that you know these are the numbers, okay? The program retails at $997.
Mm-hmm.
If the program works for you, and I'm pretty sure that it will, and if it doesn't, it hasn't cost you anything, but you invest your $997 and you think, God, I can't afford $997. I'll guarantee you that you can, because the program will show you that you will save that amount. My guarantee is it must show you can save at least 10 times that amount, or you shouldn't even buy the program. Mm-hmm. But if you buy the program and you love it so much and you refer 4 people to me who buy the program, you will get your money back. So you'll basically become an affiliate.
But wait, before even then, you've also said that normally, for anybody that watches this video, bottom line is that when you go to put your information in, he said that you can actually put your information in before you purchase the program to see what kind of savings you can come up with. Normally that was $297, and he's allowing you guys to do that for free. So you actually can get the report to see if it can do something for you before you even invest. So yeah, I think this is so good because, number one, I used to be the person that just swipe the card, swipe. I was swiper. Used to let my kids just swipe. Nobby, I admit it. That's who I was. And the bottom line for me is money just goes, you could be just thinking you're buying a $6 coffee today, but if you've done that every day for the last 30 days, that's now $200. And you're like, well, where did it go or whatever? And by just being very conscious, I've created a whole day that I'm very conscious about money. Let's look at where it's going, where it's coming from, everything. When before I was really not that person, I admit it. But the funny thing, Nobby, is I know that there are a lot of people out there who are exactly the same. They just swipe.
Absolutely. Look, the $1,000 is nothing. It's what it's going to save. And I've known people. I showed one lady who bought 10 properties for her retirement. That was the big thing, right? Buy property for your retirement and live off the investment income. Yeah. So she did this. She had a 6-figure income, and she's in a city called Adelaide here in Australia. And it's funny how it goes around. Her coach in New Zealand told her to come to me. So we went through the program. She put all of her information in there, and she said, look, I've lost my job and we're struggling. I don't know why or whatever. And I said, okay, just put the information in there. We worked out that she was about $180 to $200 a month short of the money she needed to meet her commitments. And that still included this 10 properties because her husband was still working. Mm-hmm. And I said, well, here it is. It's $180 a month. What can you do to find that $180 a month? Well, you wouldn't think that was a big deal. But at her age, it wasn't easy. She loved teaching children how to play piano. So she got back to me a couple of weeks later, and she said, look, I've enrolled a number of different people. I'm actually earning more than $180, and I know exactly where I'm going. I was able to show her that on those 10 properties, we could save her, I think it was something like about $2 million in around about 10 years on 10 properties, and she'd be totally paid out.
Wow.
Now, that's the high end, right? That's a rare thing.
Wow.
Okay.
Wow.
But
again, it's just looking at it and getting somebody to look at it who knows what they're doing.
The reason I was going to say, the reason she came to me, Tina, was because she'd been to a financial advisor, she'd been to a couple of financial advisors, she'd been to her accountant, and all of them said to her, sell one of the properties to get rid of it to help you out, right? And she didn't want to sell, right? She had this thing fixed in her head. She wanted to keep that. I said, you can keep the houses, it's not a problem. This is $180 a month is all you need to earn.
Mm-hmm.
Right? She said, that is the best information and advice I've ever received from, and all these other guys told me I had to sell. So she was really happy. So it comes back. You don't need to make huge changes in your life. You just need to look at what you're doing and do something about it.
You know what? That was probably the best statement out of the whole conversation. I mean, you said some really good stuff, but I love that because that's the same thing that I do in what I do. Is I'm like, listen, we don't have to change everything because you probably have good stuff. There's just simple things I have to tweak. And the thing that most people do is they keep throwing stuff out or starting all over or whatever because it's not working. But there's normally 80% probably works. It's the 20% I just got to move around. And that sounds like exactly what you're doing, you know, helping people understand with their finances.
Yeah, it's that easy. You know, a lot of people could sit down and write stuff down on a piece of paper. Spreadsheets. I've had one woman, she had spreadsheets going all over the place that she could refer back to and everything, but she said she couldn't get a husband on board because it was too confusing, right? Because had to, you know, link back to this and everything. And I found her online on Facebook one morning at 2:00 in the morning. I said, what's your problem? And she said, I stuffed up my budget. We just bought a mini van, people mover van, because they had a second child. Their marriage was already in trouble. He was a heavy drinker, spending a lot of money every week on cigarettes and alcohol, and wasn't a really nice person. But she stayed there, and having the second child was, you know, maybe our relationship will improve if I have the second child. It didn't work. And so when I found her, she said, I did all my numbers and everything like this, and I know I'm going to be in deep trouble because I miscalculated. And I said, okay, let me come around and we'll go through the program. So we did, and she said, I can't believe it. This whole weight lifted off her shoulders. And she said, I can see now where I made my mistake. And it's not as bad as I thought, because if I can do this and this and that, we will actually have money in retirement. We'll be able to go on retirement. I've now painted the picture in the future that they can have. The budget doesn't do. Right?
Yep.
That the drawing that I showed you before.
Yep.
It's like, you can afford to live on the future if you do this now. But if you don't know what you're doing, you'll never know what you'll have, and you'll likely end up with nothing.
Yeah. Yeah. So it sounds like when these life events happen, people can come to you and you can actually adjust them to what's going on right now. So, because like you were saying with this one lady, and it ended up only being $180, and other people were saying you need to sell at least one of your properties. Wow. That's a big difference though. $180 a month, sell one of the properties. I mean, like, that's a big difference.
Yes, absolutely. You know, it's, I'm not an accountant, and this is not accountancy stuff. This is just plain basic stuff. And the beauty is, you don't have to start over every time. You can go in and fine tune. You can say, what if, you know, I did stuff with Tina and I was able to earn an income, and let's say it was $100 a week. If I put that $100 a week into the program, what will that change going forward? It's calculated just like that, right?
Wow.
Whereas with budgets, that doesn't work,
Right.
right? they're a totally different animal. So this is not a budget program. This is a money management program. And it is so simple, and it was developed for women. Okay, so it had to be blonde proof. Now,
yeah, and make sure you show your books, because we didn't show your books. So show all of your books.
Okay, so that one there, which is money rules, right? Which is want more money, honey.
Mm-hmm. Yep.
So that was written for women. My partner is blonde, so I get away with the blonde statement. She knows nothing about technology. I could put her in front of QuickBooks, and she can use QuickBooks because I was able to train her and teach her. So the secret with that is there's a consistency there. When you go into something like QuickBooks, you're doing the same thing over and over, right? Mm-hmm. Budgets are generally done, pieces of scraps of paper and stuff like that, or, they're, and even people who use spreadsheets, it's like, and where did I put it, and what if, and it's just not there. What you need is a picture that takes you forward into the future. Mm-hmm. That's what it's all about. You know that, oh, crikey, if I get to age 65, I can see I'm not going to have enough money. I've got to do something about it wherever I am back here mm-hmm. to get to age 60, 65. So I will have enough to live on. Because when you think about it, technology is so good that now people are living to age 90, 95, 100.
Wow.
Their money is going to die before then.
Wow.
People are selling their houses and moving to outer suburbs because they're cheaper. They're moving into the country because it's cheaper to live. Mm-hmm. And the problem they're having in the city is their electricity is being turned off because they can't afford it. In Australia, I don't know, like in the States, but in Australia, the cost of electricity is through the roof. Water goes up. Gas, fuel is just shot up. Our Australian dollar is very dependent on what happens with the American dollar and the petrodollar and everything like that. So we've seen our fuel go to now $1.66 per litre. Now, I think there's about 4 litres to a gallon, if I remember correctly. So that's $1.66.
Oh, that's horrible.
Yeah.
That's horrible pricing.
However, our healthcare isn't a couple of $1,000s a month, right? Our healthcare could be a couple of $1,000s a year.
Wow.
And I know there's that disparity there. Yes. But, these are all the things that add up. So it's not about restricting yourself. It's about planning for the future. As I said before, this is a financial plan. What financial planners want to do is help people have enough money for their retirement. Mm-hmm. However, they can't show them how to do it properly. When we started doing retirement planning for people, we were able to press a button and spit out these pages that said, look at all of this. And it turned into telephone numbers, and people just couldn't comprehend it. And then when the returns on those retirement funds started dropping, and in some years went negative, it's like, where's all my money gone? Mm-hmm. Right? Mm-hmm. And I've still got all these debts to pay, and now I'm going to retire and I'm not going to have any money. And I've got to work harder to try and make up the money that you guys all just lost me. What's the use of having a financial planner? Mm-hmm. A financial plan should be about financial stability, about certainty, about lifestyle and knowledge, knowing how you're going to live in the future. Security. One of the things that women want is security. They want a roof over their head for their children. They want food on the table for their children. And they want their children to have an education and clothing. Mm-hmm. And they are the important things. And these were a lot of the things that, when it came back to this, where women were saying, I've just divorced. I've got these 2 kids. I don't know what I'm going to do. Yep. I don't have a roof over my head. Women were the best piece of advice, and this might sound totally ridiculous, best piece of advice I can give to a woman, go out and buy a people mover and fit it out as a camper van, because then at least you know where you're going to be sleeping. You don't know where you're going to have it parked. Oh. You park in a different place every night. Yeah. But you'll have somewhere to sleep. Pay that thing off, right? because we've seen people, they're here, I don't know about in the States, and I'm sure you've got it there without any doubt whatsoever, but here they're showing women who are getting their 50s and 60s, they're divorced, they're single, they're widowed. Throughout life, they've spent the time with the children, so they haven't had the income, they don't have the money, they don't have anything available to them to live in the future. So they're stuck. Buy a minivan, you'll have your own home.
Wow. Yeah, the tiny home thing is really big around here. It's getting bigger. That whole industry is growing by leaps and bounds now.
Happening here as well. We started watching it here on TV and we thought, oh, aren't they cute? And then I realized that while it's a novelty for some young couples to get themselves at least started, for other people, it's their end of life.
Mm-hmm.
Right?
Mm-hmm.
Rather than going into a retirement village or a hospital, nursing hospital or something, whatever it is, they've got their independence because they've got this tiny home. They can't afford to have the normal 3-4 bedroom house.
Right.
We call them McMansions over here. People are buying McMansions. They're ripping down old houses and putting up double-story monstrosities that they can barely afford. And if they lose their job tomorrow, they've lost the house.
Wow.
And everything they've worked for. But then it's a matter of going out to a caravan park to try and find some accommodation out there. You call them mobile homes, we call them caravans.
Mm-hmm.
Same sort of thing. But and they're putting up these tiny homes in these sorts of blocks of land so people can go and live there. Mm-hmm. While it's a novelty for a lot of people, it's not how I want to spend my life. I want to know that I can shut the door, go off on a holiday overseas, and come back to my home, to my bed, and it's mine.
Yeah.
People need that certainty. They need that comfort, and they need to know that their children have always got somewhere to come back to as well.
Yeah. And again, this is that time. There are things that are happening right now. That bubble is busting. The bubble is busting. Yeah.
Absolutely. What you saw happen in the GFC in 2008, there's a credit crunch now. These things come along every so often to test the world. I mean, you had all your bird flu, your horse flu, your financial crisis, your credit squeezes, your new presidents and everything like that.
Let's leave them out of
it. I mean, they're really testing times for people, and people are so uncertain that now they no longer know what's going to happen tomorrow. What am I going to do? How am I going to cope with this? You need to take control. Don't let anyone have it over you. And the way they have it over you and they have you under the thumb is money. When you're free of debt, it's amazing what your life feels like. It was funny that after I developed the program, and I wasn't even consciously aware of it at the time, when I started in the insurance industry, I had 4 credit cards that were maxed out and they were $10,000 each. Now, that may not sound good for a person who ended up being in my situation, but it was the beginning of my career, not the end. And I spent a lot of money throughout my life. I had good jobs where I was a roof plumber, and I was earning $400 a week when managers were earning $300 a week. I spent that on cars, I spent it on ladies, and that was life. Never had anything to show for it. Nobody ever showed me or told me I should be saving. And then later on, when I got into the financial planning side of things, it was like, I'm starting to earn some good money. I walked into the bank and I said, I've got these 4 credit cards. I want to consolidate the lot into one. And I paid that off in 12 months. Now, I did that very simply through what's basically called a snowball method. And you've got people over there who talk about this type of thing. Snowball method or the pay the highest interest debt. And I always believe, because women would say to me, how do you do it? And I say, well, it's not rocket science. You pay the highest interest debt first and spend less than you earn. It's as simple as that. The reality is that's what the program is based on, just those 2 factors. Wow. So it's not hard to do. And when I did that and paid off those 4 credit cards, and I started attacking everything, and it was a matter of, I want to earn more money because I want this to happen faster. And I set myself a goal to do that.
Mm-hmm.
And that's what the program ended up being based on. And it really was so simple. It's not hard to do. Even if you don't buy the program, spend less than you earn, pay the highest interest at first.
Yeah. Yeah, absolutely. Okay, you didn't show your other ones. You showed, yes, that's right. You didn't show that one. So you have Rich Girl, Poor Girl.
Yep, Rich Girl, Poor Girl, 99 cents on Amazon.
99 cents on Amazon. Yes.
And not only that, I turned that into a video, a half-hour video, and there's a link. There's a link in there to the video. That book is, it's not a big book, very small book.
Okay.
Takes half an hour to read. And I wrote that when I was going backwards and forwards to the States. And it's about a rich girl and it's about a poor girl. And the two of them grew up together.
That's the animated video I saw, right?
The animated one, yes.
Yes, I remember that one. Yep.
So it's a great little story. I've had people saying to me, I sat my daughter down to watch that because I want her to know there is no such thing as a white knight.
Mm-hmm.
Right? No one's going to come into riding in to save your life.
Mm-hmm.
It's a matter of what you do for yourself.
It's better what you do for yourself.
Yep. And so it does have the story does have a good ending. It is based on a fairy tale type of thing, but it does have a good ending. So, but you have to read the book.
Yes. Yeah. And so that's a good book too. So what I want to, before we end, before I give you the last word, I just want to make sure that I go back and re-emphasize what Nobby said, like the fact that if you click the link that I'm going to put beneath this video, you will go and you can see everything about his program, and then there is a form you can fill out. After you fill out that form, it will spit out a report for you. That normally is $297, but because you've watched this video, you get to get it for free. You also already know that his program is $9.97. You already know how much it costs if you decide to use it after you see that report. The best thing he said is that once you start using it and it's really improving your life, if you refer 4 people and they sign up for the program, you get all of yours back. So you've actually changed your life technically for free. So, I mean, I don't see any way that you could not do this. One of the things for me that I know is I've always looked to people who are doing it, not people who just talk about it, but people who are doing it. Because if I go to them and I know that they're already doing it, then they can show me how to do it. And so, like, Nobby's one of those people for me. There's as he said earlier in the conversation, there are a lot of people who write about stuff, who talk about stuff, but at the end of the day, you don't really know. It's time to really start looking at what, dig a little bit beneath the surface, because sometimes, by having this whole system, a system's going to show you exactly, he's going to show you exactly what can happen for you. It could be better, as he said, because there's other things that could probably happen on top of it, but at least you even know before you get started. And I think that's such a wonderful thing, because there are some things that are simplistic out there that might not really give you the result, or could be a glorified budget, as he was saying. And this isn't restrictive like a budget. This is actually taking control, not being conscious of where your money's going, what it is that you're doing, and take it from a person who wasn't always conscious about what she was doing. I mean, again, it was just about, living day to day. How do we get this done, and just do it? But now I'm just way more conscious than that. So, Nobby, is there anything you want to say in closing?
Well, the only thing is, if people are looking for a side hustle so they don't have to go and get a second job, apart from getting 4 referrals to get the program for nothing, they can keep doing that. There's no restriction. Keep referring as many people as you like, and for each person who comes into the program, you would get the $250 referral.
Awesome.
So if you did 4 a month, there's an extra $1,000 a month.
Awesome. And I say to that too, if you have intellectual property, learn to use it. There's so many other ways you can use your intellectual property other than just a job. Again, there's coaching, there's all of those things, but there are 22 other methods that you can utilize to do your own intellectual property so that you can create passive incomes and be able to do a lot of the other things. Because again, Nobby, the other thing that you said in the beginning that I like is you're talking about how, this all stemmed from the question of how do I manage my daily money? But if you're helping people manage your daily money, then they may then now start going, okay, now I should be looking at some financial products.
Yes.
Because they can see it now. They can see how this can work for them.
Yep.
Yeah.
Absolutely. And my thing is eliminate your debt. And that's what this whole thing is based on, debt elimination. So the moment that you eliminate debt, all of the money, 100% of your income is your money, right? It's not going to the bank. You're not paying interest. Every time you pay a cent in interest, you won't get that cent back ever.
Yes.
So a penny earned is a penny saved. So save that penny instead of paying it in interest. That's your penny.
It's your penny. That's your penny. Well, Nobby, thank you so much for coming on. I think you really laid out a great plan for anyone who is looking to change their situation. And I'm just saying, if you're carrying credit card debt and you're carrying a lot of it, and you know that you're in, a job sector that could be really affected by technology, now's the time to really empower yourself. Because it's not going away. It's not, this is evolution. There will be new jobs, there will be new industries for people to get involved in, but we just know what's happening now. So, I think this is such a wonderful program for you to take advantage of. So thanks again, Nobby, for coming.
No, it's my pleasure. Lovely to catch up with you again.
Awesome. Awesome. Okay, everybody. Thanks for watching. Don't forget to click the link. Talk to you soon.